Hello, good morning. Today is Monday the 3rd of December and we've seen some pretty big moves this morning on the back of the fallout from the events that happened over the weekend during the G20 summit. The big takeaway really was a possible de-escalation in the trade tensions between the US and China following Trump and Xi's meeting, and we've seen a large move higher in stocks on the back of this. You can see here's a chart of the US 500 on a 4-hourly time frame. We've seen this large gap higher from last week's closing level of around 27.56 back up above the 2,800 level. We think this is a gain of roughly 2%, and you can see prices once more probing this prior resistance, which comes in from around 2814 to 2824, could be seen as a very important level to keep an eye on going forward. On the downside, previous resistance was from around 2744 to 2756, and if we do see the market fall back and fill this gap, then this is an area to look to for possible support. If we can break above this bar of resistance, then the outlook becomes more positive and we could even get a run up back towards the all-time highs around 29.46 before the year is out. In FX space, the Aussie dollar has reacted positively to this news. You can see here we've also had a gap higher and we've moved up above possibly key resistance around 0.7335. We've also moved back above the 200-day simple moving average for the first time since April, and the market is starting to here also to look more positive if these gains can hold. Last week's closing level of 0.7307 is an area to look for if anyone's looking for this gap to fill, but if we do remain above there, then we could see further upside. There is a possible inverse head and shoulders that's been carved out here. You can see we can take the head from the lows around 0.7022, two shoulders here, and if we have a look at the neckline possibly at 0.7335, then that would project a symmetrical target for longs of 0.7648. So if we do continue to the upside, there is scope here for further gains, and you can see this level also coincides with these previous swing areas. However, if we do fail and fall back below 0.7307, then this could be seen as a false break and the market would remain under pressure. Turning our attention to the commodity space, soybeans is one of the most keenly sensitive markets to US and Chinese trade tensions due to the tariffs that China put on their imports from the US. You can see back at the start of the year in the first quarter when these tariffs were announced, we got a large daily drop in the price of soybeans, but there was some buyers stepping in around the 200-day simple moving average. Price did recover in the days that followed, but it peaked not long afterwards around 1,077. And then we saw a 25% drop all the way down to the lows around 812. You can see we've also had a large gap higher here, and the market is probing prior resistance from these highs here seen in the late summer around 920. If the market gets back above there, then we can see a retest this 200-day SMA and the outlook looks more positive, but a failure here would open up the possibility of a gap fill back to last week's close around 894. Finally, one of the biggest movers we've seen today is actually oil. Oil.WTI here has rallied more than 4% on the back of several factors. Firstly, the back down in trade tensions between the US and China is seen as positive on the demand front, but really the majority of these gains are likely coming from a supply side. There is expectation that OPEC may cut their production when they meet later this week in Vienna on the 6th of December. And these cuts may also be supported by Russia, which is obviously one of the largest producers in the world. So if we do get this OPEC Plus pact to reduce their output, then we could see further gain. We've obviously had very large declines. The price has fallen from above 75 to below 50 in just the past couple of months, with November the worst month in a decade. After this drop of around a third, if the price can recover, there's obviously a lot of scope to the upside for further moves higher, and you can see the 23.6 doesn't come in until 55.91, and we could even see pushes up towards this 61.8 level, which you can see was previously support, may now offer some resistance, around 66.37 if this move does gain traction. Last week's ending level was 50.72, so if the gap fills, that's an area to look to on the downside for possible support. But if the price moves back below then we could dip back below 50. And if 49.45 is taken out to the downside, then we could get another flush lower. In other oil-related news, Qatar have announced they will be leaving OPEC, but seeing as they're only a fairly small producer, around 600,000 barrels a day, this shouldn't have too big an impact on the supply side going forward. Okay, thanks for listening and best of luck if you're trading these markets this week.